Hey guys, so in today's video I'm going to be talking about the remortgaging process in the UK. So I have literally just last month completed a remortgage on our home, and this was the first ever remortgage that I have done. So we purchased our home 2 years ago now, literally just over 2 years ago, and we were on a 2-year fixed term deal, which means that for 2 years we had a fixed interest rate, and then after those 2 years we would be put onto a variable interest rate. And basically the variable interest rates are not very good. Generally speaking, most of the time when you're put into a variable interest rate, you're going to pay a bit more or a lot more for your mortgage every single month, as opposed to when you are on a fixed rate. So I knew remortgaging was something that I would have to do, but to be honest, I hadn't spoken to anybody who went through a remortgage, even though I know people who probably have, but it's never been a conversation that's been had. And it probably would have benefited me to have watched a video like the one I'm creating for you now. So I thought I would just create this to talk through the process as it's fresh on my mind. If you are coming up to your remortgage and you have any questions, just write them down below in the comments. Of course, it's not financial advice. I'm not a financial advisor. I'm not a mortgage broker. I'm just literally sharing my personal experience. And I find that personal experience sometimes can just be really invaluable. So yeah, again, if you have any questions and I can answer them for you, then I will. If I can't, then I'll refer you elsewhere. But I hope this video will be helpful for you and give you a bit of insight into the remortgaging process. So as I said before, remortgaging was something that I knew that I would have to do. My understanding of mortgages were that you would have maybe a 30 or 25-year mortgage, and within that time span you would have a 2-year, 3-year, 5-year, sometimes a 7-year or a 10-year fixed rate, and each time that fixed rate ends you would remortgage and get onto a new fixed rate. So that is generally how it works in the UK, and that's just a bit of context for anybody who's not in the UK, because I know it's very different in the US. Remortgaging in the US has a very different connotation, and you technically don't even have to remortgage because you're kind of on a fixed rate for the lifetime of your mortgage. So it's very different. So I thought I would clarify that. But yeah, this is a normal part, a normal process here in the UK. Remortgaging isn't a bad thing. It's something that you do to get a better deal on your mortgage. Now, as I mentioned before, the negative part of variable rate, so once your fixed rate ends and you go into a variable rate, one of the negative things is that you probably will end up paying more. But another negative thing is that you can't plan, because you don't really know what your mortgage will be from one month to the next, because interest rates could fly up, go down, go left, go right. You don't really know what they're doing, and your mortgage payments are going to fluctuate with the interest rates. So just to give you an example, even though we did complete our remortgage, we did receive a letter from our previous lender to say that our fixed rate was ending, and as of February 1st, our mortgage would now be X amount, and that amount was going to be around £160 more just for 1 month than it was before when we were on the fixed rate. So this said it was just for the month of February, and they would let us know what it is for the month of March and April, etc. So that would mean, in theory, our mortgage could just fluctuate from month to month. And again, that is just, I don't think anybody really recommends a variable rate mortgage. It's generally recommended to get a fixed rate mortgage. So that's what we did. We switched to another 2-year fixed rate mortgage. So we could have gone for a 3-year or a 5-year or a 7 or 10-year, but we decided to go for 2 years again because we liked the options it provided us. So for us personally, in our remortgage process, we decided to take some equity out of our house and pour it back into our house. And what I mean by that is we are currently undergoing renovations in our home. So we're building an extension. I'm going to do a whole series on this, by the way. So if you're interested, stay tuned, do subscribe, do like, all of that good stuff. But it did depend on a few things. It depended on how the housing market would go. So if the housing market stayed stagnant for the past 2 years, then this wouldn't have been possible. So we've gone on to a new 2-year fixed rate mortgage. There's a few things I want to point out, and I've made some notes, so let me just check real quick. So when you are remortgaging, there are generally two kind of options that you have. You can remortgage and take out equity like we have done, like I've just explained, or you can remortgage and not take out equity. You can also remortgage and stay with your current lender, but you can also remortgage and change lenders. So depending on what process you decide to go through will depend on how long it will take and kind of the amount of work it will take. So the easiest, quickest option would have been for us to stay with our current lender and also to not take equity out. When you take that option, it's a pretty seamless process, I've been told by my mortgage broker. It doesn't really take as long because you're already with that lender, you're switching products to get onto a new fixed rate, but there's just not as much paperwork, there's not as much that needs to be checked. So that is the quickest process that you could have. Now, what we decided to do, which is take out equity and change lender, is going to be the longest process out of all of those options that I just mentioned. And they say that roughly it takes anywhere between 4 to 8 weeks for a remortgage. And for us, it took 8+ weeks for a remortgage. So as I said, we chose the more difficult process. So it did take that full amount of time. It did take a bit longer than 8 weeks because during the remortgage process, the interest rates were changing like crazy. And the first deal that we were going to go with, we actually didn't go with in the end. We switched pretty much last minute, switched to another lender instead because they had a better interest rate. They had a better product, which means we keep more money in our pockets. So we decided to switch. So of course that added extra time to our process. So once you have made the decision of what you want to do, then you will, we went for a mortgage broker. We decided to use a mortgage broker. You don't have to, you can probably do it yourself. That was kind of the plan, but then we ended up going with a mortgage broker because I just didn't really want to deal with the stress of everything. And I was happy to pay our mortgage broker that we originally used in order to get our mortgage in the first place because he was great. He was great. So we went with him. It did cost us money. So it cost us, I think, in the region of a couple £100, £200-300. But we were happy to pay that because, again, we knew he was working hard to find us the best deal. And he just handled a lot of stuff that neither me or my husband had that much time to work on. So that was just the decision that we made. And it's just nice sometimes to be able to go to somebody and know that they're a professional and they can handle it as opposed to you having to handle it. Sometimes it's worth paying that depending on what it is and what your financial situation is. But for us, it was worth paying that fee. So the first thing that we had to do once we decided to use the mortgage broker was to get a decision in principle. Now, let me just kind of rewind for a second. I didn't realize that remortgaging would be such a process. I was so naive to think that it was going to be pretty quick and pain-free. And actually, I found it felt like the exact same process almost as when we purchased the house in the first place. The only big difference was instead of us paying a huge deposit out of our savings, we got a nice amount of money into our account because of the equity we took out. So that was really the only difference. But apart from that, the whole process, the paperwork, the solicitors, the conveyancers, it was the same. It was pretty much the same. So we had to get a decision in principle or an agreement in principle, depending on what you want to call it. It's the same thing. And that just lets you know what the mortgage lender is willing to lend you. So for a decision in principle, there are some documents that you need. This includes proof of identification, such as your driving license or your passport, proof of address for the last 3 years. So that could be some kind of utility bill, proof of income, and this could be through payslips or if you're self-employed, an SA302. Proof of outgoing, so they're going to want to see 3 months worth of bank statements to see how you're spending and all of that good stuff. And they'll also conduct a soft credit check for your decision in principle. Now, they may require a bit more from you or they may require a bit less. You'll find out. But again, it was pretty much the same as getting a mortgage. You had to provide all this paperwork and they're just going to dig into your finances all over again. So just be prepared for that. So after you get your decision in principle, you will now know how much the mortgage lender will give to you, would lend you. And this is an estimation. So they give you this as a rough estimate. So it doesn't mean that they would necessarily lend you the amount that they've said, but it gives you a rough idea of what they would lend you. Because the next thing that they'll need to do is do a hard credit check. And if anything comes up that's not looking too good, how much they decided to lend you or they said they would lend you in the decision in principle may change. So do keep in mind that after they do the soft credit check, they will do a hard credit check once you put in the full application. So it is important to know what the bank will lend you in comparison to how much you've got left on your mortgage. So you're going to look at what your house is worth roughly, and you'll look at how much your mortgage is that you've got left, and you look at how much your bank will lend you. So let me explain if this doesn't really make sense. For instance, if your house is worth £400,000, but the mortgage you have left on your house is £200,000, that means you have £200,000 equity to play with, just for a lack of better words, right? But if the bank, after they've ran your credit check and they've checked your outgoings, say they will only lend you £300,000, but you've still got £200,000 left on your mortgage, that then means you only have £100,000 left to pay with. So 300 minus 200 equals £100,000. So that gives you, this is what I did. I just kind of played with the numbers in my head, actually way before I even started this process, just to get an idea of would we have enough to conduct these renovations that we planned on doing. So you can run these numbers in your head ahead of time, check on Rightmove or Zoopla or whatever else to get a rough estimation of what your house will be worth, how much you've got left on your mortgage, and then you can kind of play with numbers to see if, how much equity you could potentially take out. Now, a really important thing to notice or realize as well is that how much equity you take out of your house will have an impact on your interest rate. So this is where that loan to value number comes in. So generally speaking, the lower your loan to value, the better interest rate you will have. So you do need to take that into consideration when you're thinking about remortgaging and what you want to do with your finances, because you may think, actually, I don't want to take out equity because I want a lower interest rate and I want to get myself on a 10-year fixed deal, which means that for the next 10 years, I know that I have a relatively cheap mortgage payment or whatever else. It just really depends on your circumstances, what you're trying to do, what works for you, what works for your family. So just, again, figure out what works for you, potentially speak to a mortgage broker, and just take some time to sit down and crunch the numbers, because it can really be a helpful exercise. After we got our decision in principle, we knew how much the bank would lend us, we knew how much was left on our mortgage. It was then time to make a full mortgage application, which was all handled by our mortgage broker, thankfully, so I didn't have to worry about all of that. But yeah, you make a full mortgage application and go through the whole process. This is when the solicitors and the conveyancers come into the process as well. So again, it's like buying a house all over again. And for us, this was included in our mortgage deal. So our new mortgage lender gave us the solicitors and conveyancers, and it was covered in the deal that we had. So that was good because we didn't have to pay money up front for these solicitors. So yeah, they get involved and they, need to work out things, all the legal stuff, the mortgage deeds, the title, the property, all of that stuff they need to sort out for you. So, there could be correspondence. There was lots of correspondence for us. It can be a pretty lengthy process depending on your situation. But on top of the solicitors and the conveyancers, we also had to have a valuation of our property. Now, I've heard that some people with their valuation It's been done online, so the mortgage lender didn't actually send anyone over to come and value their house. But for us, that wasn't the case. They sent somebody over to come and value our house, and I didn't really like the guy who came to value our house. I found him quite intrusive, and I even said to him when he came, I said, "You do realise this is for a remortgage, right?" And he said, "Yeah, I know." I said, "Okay, cool." He literally opened cupboards in our house that did, not wardrobes, cupboards, like opened, didn't even ask, "Oh, do you mind if I open a cupboard?" Like opened cupboards. He checked every corner of the house. He went into the loft. He was out in our garden for, I'm not even exaggerating, for about 20 minutes. And I'm thinking, what kind of valuation is this? This is not like a survey to sell a house. This is a remortgage valuation. Thought it was a bit much, but anyway, that was the process. So you will need to get your house valued, whether somebody comes or they don't come, could just depend, but that is a part of the process. And yeah, that was pretty much it. It was just about the solicitor finalising. Obviously the solicitor needed like our bank details to send the surplus of funds, which again was a very different process to purchasing the house, because you were waiting for the funds to leave your account when you're purchasing a house, but when you're remortgaging, you're waiting for the funds to enter your account. So that was a very weird feeling. Nice feeling. I'd much rather be on this side, but weird. So yeah, that was pretty much it. Again, it took 8 plus 8, 9, 10 weeks in total. I think the switch over in between the lenders definitely added to that, but it was long-winded, and I'm not saying that everybody's going to have a long-winded process, but I think you're better off bracing yourself for the worst, a long-winded process, lots of paperwork, back and forth conversations. Prepare yourself for the worst so that if it's better, it's just a positive. You're just getting a plus for that. So that was the process. Would I do it again? 100%, because as I said, we're on a 2-year fixed deal. So in 2 years' time, we'll have some more decisions to make again in terms of what we do. But I would do it again because it's now meant that we can do things to our house that we wanted to do once we purchased the home. So if you have any questions, do write me some comments down below. I'm happy to share what I know. I hope you found this really useful and helpful. It's been a long video because there was a lot to share, but yeah, so that is it. And thank you so much for watching today's video. Don't forget to like if you liked it, and don't forget to subscribe, because as I said, I've got videos coming about this extension process as well, which I think is another topic to be transparent about in terms of like roughly how much things cost and things like that, because for me personally, I've wanted to do an extension for years, and I was always trying to search the internet to get an idea of what those costs roughly would be. So yeah, look forward to seeing you in the next one, and thanks for joining me.